Hi, this is Adam Collingwood here. I've been asked by a lot of people who, especially ones that are new to trading, if I can just put a video together to explain how the numbers work when you decide to open up the Spreadbetting ticket and place a trade, whether you're selling or buying. Now, it's very easy just to presume that everybody just knows how to do this, but I guess if you are new to trading, then it can be quite overwhelming. And one of the comments that I've had from ones that certainly are new to trading is they're frightened that they may just put on too much per point. And I know that has actually happened in the past where somebody had lost, I think they were reported to have lost something like about £25,000, or they were asked to pay that because of a margin call. So I don't know how true that story was, but I know that was just literally because they were confused by the numbers and they just put on far too much on per point or per pip. So what I'm going to do is just show you, say, some of the normal indices that you would trade. So here, say if you were trading the German 30 and you've got these numbers, so if you had, say, a tracker fund, then you just like with the FTSE 100, you'd be used to this number going up and down, called the bid and the offer spread. So the buy being the offer and the sell being the bid price. Okay, so with spread betting, what we're looking at is each point movement. Okay, so a market like the German 30 can sometimes move by a couple of hundred points in a day, and certainly with as I'm doing this with the result of the EU referendum for Britain, the markets have moved by 1,000 points. So if you imagine if you'd been trading at £10 a point and you got it wrong, you could be £10,000 out of pocket very quickly. So this is important. If you're just trading the German DAX, you can see here there is a minimum amount per point, but you could trade less than £2 per point, and I'll do another video as to how you can do that and reduce that very quickly to £1 or 50 pence per point with IG. Okay, but in this case, if you were opening this up with £2 per point and you decided that you were going to buy the DAX at 9,546, if it moves 200 points in your favour, so to 9,746, then you would make 200 points times the £2 per point, you'll make £400. If you do get it wrong and it actually falls by 200 points, then you're going to see a minus of £400. Okay, so each point movement on here, okay, you need to be looking at as to see how much this could shift around. Okay, so with IG they will give you a minimum amount per point anyway. Now let's just say you are going to be trading something a lot bigger, something like Bitcoin. Okay, now if you are trading Bitcoin at just at £1 a point, I mean, that would be extremely risky, because that can move 3,000, sometimes 10,000 points in just one day. Okay, so if you get this wrong, then you really could see yourself losing a heck of a lot of money. Now, of course, IG will make sure that you do have enough money in your account to protect you, so they'll tell you what the margin requirements are. So there is a protective measurement mechanism built into this. But say here, if you're trading at 0.1, which would be 10 pence per point, that would still be a lot that you were trading at, because each point movement. So here, if you decided that you were going to sell Bitcoin, you thought they were going to drop, and they fell from 64,632. This is going to move right quickly, but 64,632. If they fell by 632 points, okay, at 10p per point, that's £63. Okay, and that can do that very quickly. So you can see here, if you did trade any more than 10p per point, then you would be taking a lot of risk. Okay, it might move in your favor, which is great, but if it does move against you, then again it could cause some serious financial damage. So the last thing you want to do is a big number like this is trade anything more than 10p per point, unless of course you have a very sizable trading account and you really know what you're doing. Okay, so trading Bitcoin is a really I would say more for advanced traders. Personally, I steer clear of Bitcoin. It moves around so much, extremely volatile. I know some people do trade it. It's not for me, but if you decided that you were going to trade it, then each movement here, for getting this decimal point here, what you're looking at is 64,548. So just that moving, even if it moves, say if it fell to 60,000 from 64,545, you're looking at say 4,500.4 at 10p. That's £450. Okay, £450, and it can do that. Okay, without looking at a chart of Bitcoin, I've seen it do that 4,500 points very quickly in a day, and that's what it can do. So let's have a look at another big number, and then we'll have a look at one of the smaller numbers. Okay, let's have a look at, say, here Amazon. That's another big number. Okay, so you decide that you want to buy Amazon. You hear some great stories still about Amazon. It's flying up. I mean, the share price at the moment, if you did buy Amazon shares, if you did physically buy them, okay, rather than spread betting them, then you would be paying $700 per share. So here what you're looking at is, if you put a decimal point there between 700, okay, and these two numbers here, then that's really what the share price is. So that's $700.23. But from spread betting perspective, the numbers will be much bigger for you to trade, and you're removing the decimal point here. Okay, so if you were if you decided that you were going to sell Amazon, IG are saying that the minimum amount that you can trade is at 24p per point. So if I put in 24p, and the price at the moment is 70,000, and let's say that Amazon's share price fell from $700. Okay, so for getting these two numbers next to it, so say it was $700, and they fell to $650. Okay, so it's fallen by $50, but from a spread bet perspective, okay, it has actually, because you're adding two more decimal points on, you would then say, well, okay, it's fallen from 70,000 to 65,000. Okay, so a 5,000 point fall. Now, a 5,000 point fall just at £1 per point. Okay, that's £5,000. £5,000 that it would have fallen by. Okay, so 24 p per point if it had fallen by 5,000 points, okay, or 5,000 pips. What you're looking at then is a fall of 1,200 pounds. That's just at 24p per point at a 5,000 point fall. Okay, so if you were on the wrong side of that, then that's what your account would look like, a negative of 1,200 pounds. Okay, so if you got that wrong, okay, at such, this is Amazon shares to trade or spread bet, the number is so high there that you really got to decide, well, am I going to take that much of a risk, or am I going to reduce the bet size, the trade size? And again, even though the minimum amount per point is 24p, I will show you in another video how you can reduce that and only trade at, say, if you wanted to, 5p per point instead of 24p per point. Okay, so that's another very, very big number. So if you are buying them, and Amazon went up from 70,000 to 75,000 at 24p per point, you'd be very happy. You've made £1,200. But if from 70,000 it fell after buying to 65,000, you'd be out of pocket by £1,200. Now, if you haven't got enough margin on account, then you would be asked to top up your account by IG in any case, but they're very good at either calling you or emailing you and letting you know that you have hit the margin requirements. So you have to be very, very careful if you're trading a stock such as Amazon, where the price is $700 a share, but for spread betting perspective, the number is still 70,000 or 69,000 or 50,000, whatever it actually comes to, the number is still very, very, very high. Okay. Now, conversely, at the other end of the spectrum, you've got where Lloyd's has plummeted today as a consequence of the vote to leave the European Union by the UK. So if we just have a look at companies like Lloyd's Bank or Tesco, a totally different kettle of fish altogether. And the reason for that is that the share price of Lloyd's Bank at the moment, if you were to buy them, you would be paying 57 pence. Okay, so just 57 pence. So if you were deciding to take on Lloyd's now in the expectation that the share price potentially could increase to £1 per point, so you're looking at a 43 pence rise, then what you would be doing is trading at a much higher amount per point. Now, if you just did £1 per point and it did rise from 57 pence up to, say, a pound, okay, it would appear on here as 100, say 0.00 or 100.06, whatever that is, but you would make £43. Okay, so you may think, well, it's not really worth doing that on Lloyd's. I'd like to, make a bit more than that, and I'm happy to risk more than what, more than maybe £20 or something. If you decided that Lloyd's would have to fall by, say, 20 pence if you decide to close the trade. So if you bought them and then the price fell from 56 pence down to, say, 36 pence, then you'd be at a minus £20, okay, at £1 per point. So what you would potentially look at doing then, once you have calculated how much you're prepared to risk from your trading account on any particular trade, so whether that's 1%, 2% or 3% of your trading account, let's say your trading account is £10,000, and you decide to trade 3% of that 10,000, so a maximum of £300 you're willing to lose by trading Lloyd's banking group. Okay, so what you may look at doing then is saying, right, okay, well, I'm happy to buy at 57, okay, and risk losing £300 if the share price falls. Okay, so what you would do then is you would say, okay, well, I want to trade, I'm happy to put a stop in place, so if the share price falls by, say, more than 16p, sort of 16p, then that's I want to close the trade down at that point. Okay, so around 40 pence, 40.94. Okay, so that's the case. Right, okay, well, I'm prepared to risk that much, so in that case I'm happy to put more than £1 per point on. Okay, what I'm prepared to do is risk £300. So if I want to close the trade if the share price falls lower than 40 pence per point, so that has to fall by 16 and call it set. Let's call it 17. Okay, so it has to say, let's call it 57 at the moment. Okay, now if it fell, so we're buying at 57, if it actually fell to 40 pence, okay, we would then, and this would be this figure that we were looking at to close the trade. So if we bought at 57 and then it fell to a sell price of 40, that's a 17 pence fall. Okay, so we're willing to lose £300. So what we would do there to work out what the amount per trade will be is we would say, well, what's £300, which is what you're willing to risk losing on Lloyd's, what is that divided by 17 pence? Okay, so that would be £17.65. Okay, so what you would do there is you would put in £17.65 per point. Okay, per point movement. So let's just say you did buy them at 57, so this figure here, you bought them at 57 pence, okay, and they went up to £1, so they increased by 43 pence. They increased by 43 pence. You have bought them, okay, at 57 pence. Okay, so what you'd be looking at is if you decided to sell them, and here it was, let's just say that that figure's higher, so this one number, the sell is actually at £1, okay, so that would look like 100 there, okay, point whatever the decimal is there, but you bought them at 57, okay, so the sell price there is indicating that you're now 43 pence up, okay, so 43 times 17.65, you would be in profit by £758.95. Okay, so that is that simple. It's 43. So that is the, say if you bought at 57, and then 4 months time, the sale price is 100, being £1. So it's increased from 57p when you bought them to £1 per share. It's moved by 43 pence. You've traded £17.65 per point, okay, on the premise that if the share price had fallen to 40 pence, you would be £300 down and you would be instructing IG to close the trade, okay. But instead, the share price has continued to ride above that 40 pence, that you're willing to only risk it going, staying above that. It stayed above it, it goes up to £1. Well, instead of actually losing that £300, you have in effect made £758.95, and if you're a UK taxpayer, then that's tax-free. Okay, so the numbers with Lloyd's obviously are very, 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 very different than if you were buying or short selling Amazon. Okay, now of course I'm buying and short selling stocks all the time and trading indices all the time. If we looked at gold, it's a similar picture. We just open up the Speadbetting ticket on gold, and there's spread there for gold. Difference between the buy and the sell price is what you're paying to your broker. But in this case, gold is a minimum of £5 per point, and the reason for that at the moment is literally because this number is low. Okay, so it's a low number, so you've got to be sure when you're deciding if you're going to buy gold. Let's say that gold was a buy of 1300. Okay, so we're interested in these big numbers here, not the point number there, because they're pretty minor in terms of where you see how quickly that moves around. So what we're interested in is this number. So if we bought gold at 1300 and we traded them at a minimum of £5 per point, and gold fell to say 1200, okay, from 1300, so it's fallen by 100 points at £5 per point, we would, if that sell price was 1200, we would be down, we'd be in a negative of £500, so just a 100-point fall there in gold. Okay, and sometimes gold, especially during this period now with the volatility because of the vote to leave the European Union by Britain, and that potentially could happen. But conversely, if you're buying gold at 1300, so effectively that would be $1,300 per ounce. Okay, in Spreadbet speak, you are actually buying at 1300, and each point that it moves up by, you get £5 per point movement. So if you did buy at 1300 and the sell was 1400 and you decided to take the money at that point, you get 5 times 100 points, so that would be £500. Okay, and going back to what I was saying with Lloyd's, which I've covered off many times before, that you calculate the absolute maximum amount of risk that you're prepared to take on each trade. So if you have got a £10,000 trading account again, then 3% of 10,000 is £300. So you would calculate when the trade would become invalid, okay, and that will determine how much you're prepared to put on per point. So if you did want to trade gold and you thought, well, okay, hold on a minute, it's £5 per point, but I do want 100 pip stop in place, okay, then there is a way that you can actually just reduce. If you're betting with Speadbetting with IG and you want to keep them as your broker, there is a way that you can reduce the amount per point after you've opened the trade up. So so just watch my other video as to how you can do that also. Okay, so what IG are after really, it's just they want the spread. So they want the minimum spread on a particular trade for it to make it worth their while. Okay, and that's why they put a minimum on there. So like with the DAX, sometimes people want to trade less than £2 per point on the DAX, perhaps £1 per point or 50p per point, and you can do that. So just watch the other video that I've recorded for that, and you can see how you can reduce that bet size. You will have to initially pay the initial £2 spread to IG, but very quickly you can just reduce the amount per point to whatever you want it to be, to £1 or 50p or whatever. But once you've actually opened up the spread bet ticket with them. Okay, so I could go into lots and lots and lots of different markets, but I just wanted to show you the difference between the big numbers, so such as Bitcoin and Amazon, and then the smaller ones such as Lloyd's Bank, and what gold would look like. And of course you got Desco, Vodafone, and the same rules apply there also. Okay, so make sure that you don't trade more than you should do per point, so get those numbers right. The good thing is, as I said, that IG will calculate the margin requirements for you anyway, but if you're calculating your stop as to how much you're prepared to lose on each particular trade, then that will determine the amount per point that you can trade in any case. So good luck with your trading. I hope you found this helpful, and I wish you every success. And that's Adam Collingwood signing off.